let's talk about making money while you sleep. Dividend growth stocks, the holy grail for long-term investors. We're skipping the get-rich-quick schemes and focusing on companies that pay you to hold their stock and give you a raise every year. Imagine a portfolio of tiny employees, each working non-stop and getting annual promotions. Dividend growth stocks create a snowball effect, turning modest investments into massive streams of passive income. This is how you build generational wealth and real financial security. It's a strategy that takes patience, but the payoff is incredible. In this video, I'll break down my top 20 dividend growth stocks you can't ignore for 2025. Let's dive in and start building your passive income machine. First up, Johnson & Johnson, a dividend king with over 50 years of consecutive dividend increases. Their products are everywhere, and their focus on pharmaceuticals and medtech means even more growth ahead. J&J is a cornerstone for any serious dividend portfolio. Next, Procter & Gamble, behind brands like Tide, Crest and Pampers. Their products are daily essentials, creating a reliable revenue stream and a nearly impenetrable moat. P&G has paid and raised dividends for over 65 years. Investing in P&G is betting on daily habits and steady growing income. It's the definition of a boring stock in the best way. Coca-Cola is a global icon, with a presence in over 200 countries and a portfolio far beyond the classic red can. Over 60 years of dividend increases and massive free cash flow make KO a dividend powerhouse. Their global reach provides stability and diversification. If it's good enough for Warren Buffett, it's worth a look. PepsiCo isn't just soda. It's also Frito-Lay, Doritos, and more. Their dual focus on snacks and beverages creates a resilient, cash-generating business. Over 50 years of dividend hikes and a knack for adapting to trends make PepsiCo a robust long-term pick. For dividend growth, PepsiCo's diversification is hard to beat. McDonald's is more than fast food. It's a global real estate empire. Their franchise model generates stable, high-margin cash flow, fueling over 45 years of dividend growth. They adapt to trends and invest in digital, keeping the brand strong. McDonald's is a bet on global scale and shareholder rewards. 3M is innovation in action, with products in nearly every industry. Their culture of invention and diversification shields them from downturns. Over 60 years of dividend increases show their commitment. Despite recent challenges, 3M remains a dividend stalwart. Microsoft has transformed into a cloud and AI powerhouse, with recurring revenue from Azure and Office 365. Double-digit dividend growth and a mountain of cash make it a tech dividend leader. You get stability and innovation in one stock. For tech growth and dividends, Microsoft is tough to beat. Apple's ecosystem locks in customers, and its services division is a profit machine. Since 2012, Apple has consistently raised its dividend and bought back shares, boosting shareholder value. The yield is modest, but the growth rate and cash generation are unmatched. Apple's balance sheet is fortress strong. It's a long-term winner for dividend growth. Visa takes a cut of nearly every digital transaction worldwide. As cash fades, Visa's scalable, high-margin business thrives. Explosive dividend growth and a pristine balance sheet make it a top financial sector pick. Visa is a direct play on the future of global commerce. Home Depot dominates home improvement, benefiting from both new home sales and renovations. Their strong brand and market leadership drive consistent cash flow and dividend growth. Online and pro-contractor investments fuel future growth. As long as people own homes, Home Depot is a dividend staple. Johnson Controls powers smart, efficient buildings worldwide. Their focus on sustainability and long-term service contracts creates recurring revenue. Over a century of dividends and recent growth make JCI a quiet leader. It's a behind-the-scenes play on the future of real estate. Texas Instruments dominates analog and embedded chips, essential for everything from cars to appliances. Their diversified business and cost control generate massive free cash flow. Nearly 20 years of high dividend growth and share buybacks reward investors. TXN is a bet on the electrification of everything. IBM is reinventing itself with hybrid cloud and AI thanks to its Red Hat acquisition. Despite challenges, IBM's dividend record is rock solid. With over 25 years of increases, it offers one of tech's highest yields. For patient investors, IBM is a higher risk, higher reward dividend play. Chevron's integrated model smooths out energy market volatility. Over 35 years of dividend growth and a disciplined management team set it apart. Even in tough times, Chevron prioritizes its dividend. It's a top choice for reliable, high-yield energy income. ExxonMobil is a global energy giant with unmatched scale and a 40-year dividend growth streak. Their integrated operations and cash flow support a high growing yield. Oil and gas remain essential, making ExxonMobil a key income play. It's a classic for energy-focused investors. Pfizer's deep drug pipeline and recent acquisitions fuel future growth. Their high-yield dividend has been growing steadily since 2009. Innovation and a strong balance sheet make Pfizer a healthcare income staple. It's a must-have for dividend-focused portfolios. Intel is betting big on a manufacturing comeback, investing billions in new chip plants. They recently cut their dividend to fund this turnaround, but the new payout is more sustainable. If their strategy works, future dividend growth could be huge. It's a contrarian play on American tech leadership. For patient investors, Intel offers high risk and high potential reward. Verizon's premium network and sticky customer base generate massive recurring cash flow. Their high-yield dividend has grown for nearly 20 years. As 5G expands, new revenue streams emerge. For conservative income, Verizon is a classic pick. AT&T has refocused on its core telecom business after shedding media assets. The new lower dividend is safer and still offers a high yield. As debt falls and the business stabilizes, there's room for stock appreciation. It's a turnaround story for value and income seekers. Walmart's scale and low prices make it a retail juggernaut, especially in groceries. Over 50 years of dividend growth and a successful e-commerce pivot keep it relevant. Their omni-channel strategy competes directly with Amazon. Walmart is a proven, adaptable dividend machine. There you have it, my top 20 dividend growth stocks for 2025. These industry leaders are the backbone of a reliable, wealth-building portfolio. It's not about timing the market, but about patience and compounding dividends. Start small, reinvest, and watch your income snowball over time. Which stocks are in your portfolio? Let me know in the comments. If you found value, hit like and subscribe for more wealth-building content. Thanks for watching. Here's to your financial freedom.